Okay, what is business transaction? Business transaction is an activity or event that can be measured in terms of money and which affects the financial position or operation of the business entity. It affects on any of the accounting elements, assets, liabilities, capital, income, and expense. The recording process is called accounting cycle.
So basically, this chapter is about accounting cycle. There are 6 basic steps of the cycle. The first step is identifying, collecting, and analyzing the source documents. The second step is recording it to the journals. The third step is posting it to the ledgers. The fourth step is balancing the accounts. The fifth step is preparing a trial balance. And last but not least is preparing the financial statements.
It begins with source document. The definition of source document is an original record which contains the detail that supports and substantiates a transaction that will be entered in an accounting system. In the past, source documents were printed on paper. Today, the source documents may be an electronic record. The function of the source document is to describe the basic facts of the transaction, such as the amount of transaction, to whom the transaction was made, the purpose of the transaction, and the transaction date provides evidence. The example of the source documents is cash receipt, invoice sent or received, and cancelled check.
The second step is transferring it to journals. In accounting and bookkeeping, a journal is a record of financial transaction in order by date. Journals are also known as books of original entry or books of rhyme entry because it is where the information from source documents are first recorded. It is used to record the business day-to-day activity. The function of journal is classifying expenses according to the type of work such as selling, administration, general, and finance.
The examples of journal are general journal, purchases journal, and sales journal.
Source documents consist of invoice, credit notes, cash receipts, payment voucher, check, and memo. There are 3 types of journal: cash book, special journal, and general journal. Special journals consist of purchases journal, sales return journal, and purchases return journal. So for example, this is one of the source documents you need to identify the transaction and analyze it, whether you'll put it in the cash book, special journal, or the general journal.
Ledger account contains a record of business transaction. It is a spread record within the general ledger that is assigned to a specific asset, liability, equity item, revenue type, or expenses type. The function of ledger is the record-keeping system for a company's financial data with debit and credit accounts records validated by a trial balance. The general ledger provides a record of each financial transaction that takes place during the life of an operating company. The example of ledgers are cash, account receivable, fixed assets, account payable, and revenue.
There are 2 types of ledgers: general ledger, subsidiary ledger, or also known as control account. The process of journal to ledgers is called posting.
Balancing of accounts is account need to be closed and the balance are brought forward to the next accounting period. The function of balancing of account is provide a complete picture of a company. This is the example of balance account.
Balancing of accounts is accounts to be closed and the balances are brought forward. This is an example of balancing an account. As you can see, the last day of the month, which is the 30th, is when the account is closed. Then, we have the balanced debit and credit side. After that, the balances are brought forward to the first day of the second month.
Trial balance unadjusted. Trial balance unadjusted is the listing of general ledger's account balance at the end of a reporting period. The function is used as a starting point for analyzing account balances and making adjusting entries. Here goes the example of the trial balance.
Trial balance is a listing of all balanced accounts. So, after all the accounts are balanced, we prepare the trial balance. For example, the balance of capital accounts is put at the credit side of the trial balance, while the cash's balance is put at the debit side of the trial balance. Do this for all other accounts. If it is balanced, you are most likely to be 100% correct.
The last step of recording business transaction is the financial statement. The definition of financial statement are written records that convey the business activities and the financial performance of a company. The function of financial statement is to obtain the net income or loss for the period, or to obtain the financial position of the business. The example of financial statement is the statement of comprehensive income and statement of the financial position.
The amounts of the balanced trial balance will be posted in the financial statement. There are two financial statements, Statement of Comprehensive Income and the Statement of Financial Position. The Statement of Comprehensive Income is to obtain the net income or loss of a company, while the Statement of Financial Position is to identify the financial position. You can refer to the textbook page 167 and 168.